Yes, Chairman. Apologies from Councillors Nick Bayliss, Lisa Methley, Rachel Lilly and Veronica Hallman.
Okay, thank you. Is there any urgent business?
No, Chairman.
Thank you. Public speaking time?
No members of the public have registered to speak.
Right, okay. And agenda item number 4, declarations of interest, members.
Whether I am or not.
Okay, so we'll move straight on then to agenda number.
Okay, fine, bye now. Bye now.
Agenda item number 5, which is external audit plan. Is Julie going to present that?
Yes, I am, Chair. Can everybody hear me okay?
Yep, I can hear you, Julie.
Can everybody in the room hear me?
Yeah, I can hear you.
Yes, we can hear you.
Perfect. Thanks very much. Good afternoon, councillors. Just by way of introduction, my name's Julie Mashey. I'm the new audit director and engagement lead for Sedgemoor District Council, taking over from Alex Wallin. And we have the paper we have in front of you today is our audit plan. The audit plan has a principal role of communicating to you the approach that we'll take in conducting the audit for 2020-21, and also communicating to you the significant risks in relation to the audit. Three things I'd probably want to pull out from the plan to draw to committee members' attention. The first thing is in relation to the audit of the financial statements. In terms of the key significant risks that we draw to your attention in the audit plan, there are some significant risks that are mandatory across all audits, irrespective of the organisation, where we're required to undertake work in relation to what we refer to as management override of controls. So that is a sort of a presumed significant risk across all audits. And our other significant risks are in relation to those areas of the accounts that are the most material in terms of size, but also those that are the most sort of judgmental in terms of the assumptions that are made by officers, the estimation that's involved, and also the significance of the value that falls into the council's accounts. So you'll see that the significant risks focus principally on the valuation of the council's property, plant and equipment, and also the valuation of its closing net pensions liability at the balance sheet date. The other area to draw to your attention from this plan is to highlight some significant changes that have happened to the auditing standards during the course of the year. So when I give my opinion at the conclusion of the audit, I am required to confirm as part of our professional standards and requirements that we have conducted those audits in accordance with international auditing standards. And one of the key changes that have happened this year is around International Auditing Standard 540, which is around our work on estimates. And so there's a couple of pages specifically within the plan that talks to you about what the requirements are that we are required to fulfill under ISA 540, and how management will see sort of differences in our approach this year in terms of challenging the basis for those estimates that have been included in the council's accounts. The final area to draw to your attention is around the work that we undertake as part of our value for money assessment. And committee members may recall that in previous years we've actually given sort of a formal opinion on our value for money audit. It's a binary sort of conclusion where you either have a sort of an unqualified clean or a qualified VFM conclusion. That sort of binary qualification has now gone under the new Code of Audit Practice issued by the National Audit Office, and now we're required to make a much broader, more sort of narrative-based assessment. So it has a much bigger breadth and depth of coverage in terms of what we're required to look at. And you'll see in the VFM section of the plan, it talks about it under these sort of three pillars, under financial sustainability, governance, and then ensuring economy, efficiency and effectiveness in the use of resources. And so we are required to present to you a separate report at the conclusion of that assessment, which will give you some narrative commentary around the council's arrangements. And if required, if we identify there's any evidence of any significant weaknesses in a council's arrangements, then we're required to issue, under the Code of Audit Practice, we're required to issue to you what are referred to as key recommendations. So any area we have a significant weakness, you will be issued a key recommendation. In many cases, we will not find significant weaknesses, but there may be scope for improvement opportunities or where we want to add value to the organisation. So we will, in some instances, issue other improvement recommendations to help sort of strengthen the existing arrangements that are in place. So you'll see that as a result of the additional work that we have to do around the new estimate standards and also the increased breadth of scope of the new VFM assessment under the new code, you will see that that has an impact on the level of audit fee. The audit fees are required to go to PSAA to be formally approved in terms of any variation. But we have tried to itemise to the committee all the different component parts of our audit and how that additional level of work has flowed through to the final fee that we propose to you and effectively will communicate to the PSAA for consideration. That's all I wanted to cover on the plan, Chair, specifically, but I'm happy to take any specific questions.
Thank you. Are there any questions, members?
Thank you for that. You say that you now have a scope to make recommendations and also recommendations of improvement. Are there any that we should be looking at contained in the report?
So no, not at this stage. So we haven't conducted the formal assessment as of yet. So the timescale for the completion of the VFM assessment is that for this first year of the new arrangements, recognising both the additional challenges that that COVID has brought to local authorities and also the fact that this is the first year of the assessment, so it's important we get that sort of baseline assessment under the new approach as accurate as we can. The National Audit Office have broadened the extension of given an extension of the timetable, so we're required to formally conclude our assessment within 3 months of giving the opinion on the accounts. So we'll be looking to sort of conclude our VFM assessment by early into next calendar year. So at this stage, until we undertake the work, we're not able to sort of formally give any sort of final recommendations at this stage, but we will come to a future audit committee and update you on both how that work is progressing, and we are required to under the new code requirements, we are required to ensure timely reporting. So we don't have to wait till the final conclusion of the audit to issue a recommendation. If there is evidence of significant weaknesses that come about during the course of our work, there is scope within the new Code of Audit Practice to report those on an interim basis to you as they come to our attention. So if we feel the need that we need to enforce that sort of more prompt reporting, then we'll obviously bring any recommendations to this committee at an earlier time frame to that.
Thank you very much. Look forward to that.
Thank you, Chair. I just wanted to make a couple of comments in terms of the report. The first one, on page 15, where you talk, it's where you talk about the value for money weaknesses, where you talk about the one Somerset challenge. I mean, I'm sure you do have to look at that, but we did go through quite a lot of questions in terms of the referendum, and we did provide a lot of information at the time. All 4 districts did. We did also have Council's opinion. So, you know, I think that that's already been done actually in terms of that challenge. The other thing I just sort of mentioned is the fact that obviously the decision's been made now that there will be a single unitary from April 2023. So clearly, when you look at financial sustainability, that will need to be factored in terms of Sedgemoor's medium-term financial plan, because there's sort of only 18 months left of Sedgemoor as Sedgemoor District Council now. So that would need to be factored in. And the only other final point I just wanted to make is the date of the audit committee is the 6th of December, and the audit dates now are October and November, and I just that is quite disappointing for us that the audit isn't until that stage. I totally understand the resource issues that Grant Thornton have, but we did get our accounts finished quite early, so it is quite a big gap for us. So it's a little bit disappointing with the internal finance team, but at the same time, I accept Grant Thornton has only got a certain level of resources to get the audit done. But I just want to point that out. So remember. Thank you.
Are there any more questions, members?
Yes, please. Hello.
Chair,
Julian?
I can't hear. Hello.
Yes, carry on, Julian.
Hello. Yes, sorry, I apologise. I was delayed in getting into the meeting, and I must say that when I'm looking at the picture of the meeting here, it is very out of focus. I've tried to send emails to that effect and no response so far. But I'm looking at the comments on page 7, and it's on the valuation, annual reevaluation. And it concerns me that this was one of the most significant assessed risks of material misstatement. I wonder whether the auditor could explain that comment, please.
Yes, of course, Councillor. This is quite a common significant risk across many audits, and this is purely down to the size of the balance within your account, and also the basis in which this particular balance has to be valued and estimated for the accounts. There's a lot of subjectivity and there's a lot of judgment involved. So if you look at the different components of what's involved in evaluation, so if I was to talk about you know, an item of property, for example, there's things like the council needs to provide data to your external valuer on the floor areas that are involved for that particular property. They need to make sure that they're using the right sort of rate per square footage. There's assumptions to be made on the level of obsolescence in terms of what state of condition that property is in. And also specific other sort of locational factors as well. And certainly in our experience across a number of audits, it's in challenging those specific assumptions with valuers that we're identifying that some quite out-of-date information is being used, or that the assumptions that have been applied are quite generic and not specific to individual assets. So certainly in our experience, these are the areas where we've seen quite a lot of audit adjustments that have been required. And indeed, I recall from speaking to colleagues that there were some specific issues around the asset valuations at this council last year. So that's why we highlight it as a significant risk, because what we're trying to identify is, of all of the balances across the accounts, which are the ones that of the highest likelihood that could result in a material adjustment. Many balances within accounts may be subject to some smaller amendments, and that's just a fact of life, unfortunately, because if you think about the timescales that your officers have had to prepare these accounts to, with all the best intentions, sometimes things are just overlooked, just as an oversight. But indeed, some things, they're only preparing those accounts based on the latest available information they have at that point in time. And so we have the benefits that we have a few more months to look at these things afterwards, and indeed some information can be updated at that point. So what we're trying to look at here is those areas where there is the greatest risk of material audit adjustments arising, and material misstatements arising from the audit. And certainly asset valuations and the pensions valuations are those where we think there is that greatest risk.
Can I come back, please, Chairman? Hello, can I come back, please?
Yes, you can.
Thank you. Yes, I was rather worried about the word of misstatement, which is a very subjective word, and it's either whether it's a sin of omission or a sin of commission, and I don't think that's been actually clarified which one of that is. But can I move on to the question about pensions, because it really did worry me, and these were the comments on page 8. We were on pensions, because the council's been go into a unitary authority, and there's going to be significant change in the pension scheme, as with staff reductions. So the income going into the pension scheme is going to be lower, but also there's going to be significant numbers of officers who are going to take early retirement or move on, or lose their jobs. And I just wondered whether the pension fund, as it stands, was fit for that. This would apply to all the authorities in Somerset, not just to Sedgemoor.
Your finance officers might want to come up specifically in terms of the future around the pensions and what impact that potentially will have. But certainly looking at it in the context of the risk that we've presented in the audit plan, this is looking at effectively at the valuation as at a snapshot at a point in time for the 31st of March 21. So obviously this was pre the reorganisation effectively. So it's probably worth reiterating that when the actuary does their valuations, there's two valuations that the actuary will complete at any point in time. There's the one that they do every 3 years, the triennial valuation, which effectively will drive the level of contributions that your council have to make each year to go into the pension fund, and that effectively will come from your council reserves, your general fund balances. The purposes for what we're looking at for the accounts is the what we call our the accounting valuation, or the IS 19 valuation, which is just effectively a roll forward valuation from the point of the last triennial full valuation, to say, as at this point in time, recognising whatever changes of assumptions have happened since that last full funding review, what is the snapshot as to what are the assets and liabilities for our share of employees within the fund as a whole at that point in time. So there's very different assumptions that are involved for the accounting basis for your accounts to what effectively will drive the actual costs that are charged to your bottom line, and indeed those will be of course impacted by the impact of the reorganisation going forward. But I don't know if Alison or colleagues want to comment any further about the future outlook as far as pensions is concerned.
Thank you.
Thank you. Only really just to say that in terms of the unitary, I mean, obviously that will have quite a big impact on pensions and that work. That there's a huge amount of finance transition work, huge amount of transition work full stop, but in particular there's a huge amount of finance work. So that, you know, that will come together within the next sort of year or so, I guess, and it will be one authority. So I guess all those pension, I mean, luckily it's all the same pension fund anyway, in terms of it being administered by the same by Peninsula Pensions, but that will all come together. But this is talking about the you know, as Julia said, this is talking about Sedgemoor District Council pension. So it's a slightly different discussion, I guess. But yeah, you know, there's a lot of work that's got to be done on bringing everything together into a single authority, and pension schemes, all of that.
Thank you for that. So members, we only actually have to note, have to note the plan. So I think we've done that. So we'll now move on to item number 6. And I understand Julie's going to start and then Alison Marti is going to carry on. Am I right in that assumption?
Yes, that's right. Thank you very much, Chair. So members, this document was initiated through request by ourselves as your external auditors, and as the sort of title of the report suggests, we make a number of inquiries to the council, both to management and to yourselves as the audit committee and those charged with governance, so that we're aware of any specific issues or circumstances that have happened at the council during the course of the year that need to be brought to our attention as we are developing our risk assessment for the audit. So that's why the document, it refers to it as informing the risk assessment. It's helping us to determine what are the key risks for this council. Clearly you've just heard from my audit plan what we believe those key risks to be, but this is an additional document that supplements that, just in case there are any other aspects that we were unaware of that need to be brought to our attention in that sort of that risk assessment and that thinking. So the informing the risk assessment document, the inquiries that we're making are along similar themes to what we've had to inquire about in the past. It's a bit more structured in the way that we've set it out this year, particularly because of the additional requirements this year under the new auditing standards around estimates that I referred to earlier on. But effectively it covers a couple of areas. So it asks you about your awareness of any known or suspected frauds. It talks to you about any awareness around compliance with laws and regulations within the council, talks a bit about things like related parties, and also talks about, as I said, the key estimates of the authority as well. So effectively, your finance colleagues have compiled the responses that you have in front of you, and this is an opportunity just to put the paper in front of this committee to make sure that you can relate to, you can recognise the responses that management have provided, but it also gives the committee an opportunity to add any supplementary points. So if there are additional items under any of those headings that you are aware of that management haven't brought to our attention that you feel it's important to bring to the attention of the auditor, this is your sort of opportunity to do so. So it's really just a confirmation from the committee to confirm that this is consistent with your understanding.
Okay, thank you, Julie. So this report, as Julie says, represents our responses to the risk assessment. You will have read.
I think we might have lost Alison.
Just trying to get her back into the room. It's just completely wet.
Can you hear me now?
Yeah.
Sorry, I lost connection there. Right, I'm back. Okay, so you will have read the responses, so I'm not going to go through them all. I'm just going to highlight a few key ones. I'm not sure if it's easier if I try and present my screen with the report on it. So I'll do that anyway. So can you see the general inquiry screen?
Yes, Ken.
It's really weird because I've got two meetings open now. It's really quite bizarre. So the first section, as I say, general inquiries of management. So these cover some general questions rather than getting onto the specifics that Julie mentioned. The general inquiries are things such as what we regard as the key events or issues that will have a significant impact on our accounts this year. Obviously, the big ones for us will be COVID and all of the COVID grants and the COVID income that's been coming through the accounts. And also in this year and previous year, it's been about our commercial property. So we've always had a note about material items in our accounts covering our commercial property portfolio. And we bought our last properties in 2021. We have put lots of information about COVID grants in the accounts this year. So hopefully all of those transactions will be covered off and we'll see how we get on in the audit for that one. So that's the big issues on our general inquiries, our significant inquiries. There are things like, are we aware of any guarantee contracts and loss contingencies? And we don't tend to have guarantee contracts, and our loss contingencies we highlight as being business rate appeals, and we already provide for those. It also asks whether we use external advisors so that we can see who we're regularly using for each year. And these are the significant advisors that we use highlighted there. The next more specific section is about fraud. So obviously fraud is a huge potential risk, but we've got lots of procedures in place to make sure that we highlight any potential risks. We've got lots of auditing structured in such a way that it looks specifically at risk, and the annual governance statement is later on in your agenda today, and that covers risk as well. No material frauds have been reported. This is quite a large area about risk assessment, but as I say, that's you've had a chance to look at those questions. There's nothing I need to highlight there. The next section is about laws and regulations. So how we make sure we reflect the impact of laws and regulations in what we do. So obviously we do have regular internal audit reports. We've got a code of corporate governance. We have an annual governance statement, And as I say, we're always doing risk management reviews through the audit committee. Related parties is quite straightforward. It says where we have relationships with related parties. As members, you'll know that you all fill in related parties forms annually. So that's covered on there. So probably the biggest area is in accounting estimates. This area talks about, much as Julie spoke about earlier on, about where the large areas for estimates are, so where the biggest risk of misstatement is. So we identify our most significant accounting estimates, and these are pensions, impairments, and valuation of our long-term assets. But there are also other estimates we use in the accounts, and they all are highlighted. Not all, the biggest one, most significant ones are highlighted in the statement of accounts, but some of the others aren't highlighted. So here in the table, this is talking about how we highlight those risks, and then it goes into more detail about specific risks and how we mitigate against those. So for example, the valuations, how they're measured, how they're revalued, and the fact that we use a qualified valuer to do that. And we also highlight the fact that valuations will always have a degree of uncertainty to them. Things like the fair estimates of financial instruments. So financial instruments are measured at 3 different levels. Again, that's a judgment as to how these are measured. Level 1 is about being able to find an identical asset. So that's the lowest risk way of measuring. But level 3 is where there isn't an observable input for the asset. So obviously that's got the biggest element of risk associated with it. In our accounts, we highlight how we measure each of those and the level of risk, the level of inputs involved, and therefore the risk. And we use Treasury advisors to advise us on some of those financial instruments. Things like provisions are also an accounting estimate where we're providing for expenditure that's going to happen in the future. Most of that relies on budget monitoring and officer knowledge. So that is a material risk. It is a risk, but it's not material. None of our provisions are material. I don't think there's anything else that I specifically want to highlight there, but hopefully you're happy with the responses that we have put in this report. But Alison and myself would be happy to take any questions if you have any.
Thank you, Mrs. Monteith. Are there any questions, please? Councillor Bruce.
Thank you, Chair. It was just on the general inquiries on question 2. It talks about a new accounting policy for grants has been considered. Is that a work in progress still? Was it considered as necessary? Could you just expand on that a little bit for me, please?
Yeah, sorry, I thought I was on mute then and I wasn't. Yes, so when I mean we considered it while we were closing the accounts, and so yes, we had an accounting policy put in because the grants are quite significant, and like I say, we've got a material note as well that covers how we deal with grants.
Thank you.
Are there any more questions? Okay, we just need to review and note. So are members happy with that? Yeah. Thank you very much. So now we're moving on to agenda item number 7, internal audit progress report.
Thank you, Chair. Can everyone hear me okay? Yep, got the thumbs up. We have 2 reports to be presented today. We have the out-term report, which summarises the work we have undertaken as part of the 2020-21 plan, and it provides members with an update on any work that has been completed since our last update in March. The work detailed within the out-term report has been used to inform our annual opinion, which Alistair will present to you shortly. The work completed since March 2021 is summarised on page 3 of the progress report. There are 4 advisory reports since our last update, 1 substantial assurance, 2 reasonable, 1 limited, and 1 follow-up report. As usual, we bring any audits that have received a limited assurance of have identified a high corporate risk to the attention of the committee, as well as any follow-ups. We have also brought to attention, members' attention, one further advisory piece of work on which was our baseline assessment on fraud risk. Before providing any more details on these audits, we would like to provide members with more information on our IT audits. As you can see from the table on page 3, 2 of these have been completed since our last update, one on the ICT risk scope review and the other on the cybersecurity framework. I have asked our Assistant Director for ICT, Digital and Cyber to provide an update on these, and I will now hand over to Darren Roberts. You're on mute, Darren.
Thank you, Adam. Just check everyone can hear me okay. Thanks, Steve. Okay, well, welcome everyone. My name is Darren Roberts and I'm the Assistant Director for ICT, Digital and Cyber Audit here at SWAP Internal Audit Services. Just to put it into a bit of context, my team provide ICT, Digital and Cyber Audit across all of the SWAP partners. So the team aren't specific to Sedgemoor. And one thing that we wanted to do when we put the audit plan together for last year is come together what we call a framework view of how both IT governance, estates and infrastructure work along with cybersecurity as well. And there was a specific reason why we wanted to do it as a framework review rather than a standard risk-based review that Adam and Alistair will talk about a little bit later. Particularly for cybersecurity. As far as I'm concerned, cybersecurity is for everyone. It shouldn't just be an ICT issue. It should be everything that's covered right down from the top, from the corporate management team, through to members, through to users, and effectively through to the people that go ahead and use your services digitally as well. Consequently, what you would need from us as your auditors is a framework review that sets out the specific cybersecurity controls that we feel that fundamentally cover items of risk, but that needs to be put over in a way that demystifies, in effect. It's free of jargon and it is there to enable corporate management teams, members and members of the public to go ahead and own that themselves rather than having to rely on IT. Basically, what I'm saying is that cybersecurity shouldn't be a technology issue, despite the fact, of course, is that technology basically drives your authority. Without technology, you probably would not be able to deliver your services going forward. And in the new normal which we find ourselves with the ever increasing platforms on digital, then that's going to become even more difficult going forward as well. With regards to the framework review, the way it's set out is that we looked at 20 high-level controls covering cybersecurity from end to end. So this covers from the top end, such as policy, governance, user awareness, user security, right down through to the technology that Craig Wilkins and his team uses at your network borders to protect your data that sits within. What we've done is that we've come to a high-level assessment on risk on each of those. Now, that has numerous advantages. Number one, it allows us to present the framework review to everyone here and to the corporate management team to enable that accountability and responsibility to go forward. And secondly, as you'll see from the RAG table within the report, it enables us to identify specific items where we can help out Sedgemoor going forward with regards to maintaining cyber risk. And I'll give an example. About 18 months ago, we had a partner approach us with regards to an officer that was very concerned over the penetration testing and wanted SWAP to have a look at the penetration testing within the authority. But it's only when we undertook the cybersecurity framework review that we found out that penetration testing was probably the least of their worries. And actually, there was a lot more that they had to get themselves in order with regards to cybersecurity, specifically with regards to what they knew they were protecting in the first place before we even talked about penetration testing. And that's one of the key drivers for this framework review. It's for everyone to understand the current status with regards to cybersecurity in Sedgemoor going forward. Now, what this report does appreciate, it also appreciates that Craig Wilkins and his service are putting a lot of changes in place at the moment. A lot of improvements are going forward. So that's reflected in the report that we put forward to you. The Report itself, in summary, is presented as what we call a RAG table: red, amber, and green. And I'll quickly run through what each of those controls refer to. In green there, it says fully compliant. Well, actually what that means is as far as we're concerned, there are controls in place. There may well be risks surrounding that, but we're fairly confident at the moment that those risks are being managed internally within the authority. I'll come back to the ambers in a moment, because let's go on to the reds. The reds are where we've looked at it and there's just basically no control in place. And a really simple example of that would be there's no corporate information security policy. It's guidelines that sit on an intranet somewhere and they're not updated and they're not relevant and they don't refer to what's being protected. So that's where we refer to a red. And I'm glad to report that there's no reds at Sedgemoor. However, from that, there are a number of ambers. Now, the ambers can be viewed in one of two ways, and this is where the framework review is very collaborative and assistive to the authorities going forward. We could either turn around and say, as we've put in the report, what we will call high-end ambers. So ones where we can help Sedgemoor going forward and populate the IT and cyber audit plan with those risks that are currently relevant, or the ones that we feel would need more attention right now. Or it could be the opinion that those have been recognised by management as amber risks, and that we could be pulled back in 6 to 12 months' time so that management can evidence how those ambers have moved to green. Now, for yourselves as members, that's extremely useful, because if we come back, say, in 6 to 12 months' time, you'll be able to see the direction of travel that those ambers have gone, hopefully to move their journeys in towards green. And from there on, we would come in periodically and just simply check with regards to the status of those ambers and greens going forward. So that's where we are with regards to the framework reviews. In future, the reviews, and as you say, we pointed them out. There's one there with regards to recovery and backup, and one with regards to change management. Those will be appearing in Alistair and Adam's risk-based reviews, and those will, the results of those provide a full assurance review that will go ahead and contribute towards your annual governance statement. So, as I said, it's what has been produced to you today is the summary. There is a secondary appendix as well that contains the findings of each one of those 20. It does go into detail. However, I do tell my team that in the appendix, in the findings, try and make them no more than 1 page. So that the individual elements can be explained out. But that's in a separate appendix with regards to how we came to each one of those findings for the 20. But I think today the crucial document for yourselves is that summary with that RAG table in it. And as I said, I would see that as a baseline going forward for the direction of travel to maintain healthy cybersecurity in Sedgemoor. I'm welcome to any questions.
Thank you. Are there any questions, please? Okay, so we can move on with the rest of the report, please.
Okay. Yes, thank you, Darren. I think if any members haven't had the summary report, if you can just sort of let me know, obviously we can provide that as well, just so you've got it, and we can provide that outside of the meeting. Progressing with the outturn report, moving on to page 4 is a summary of the limited assurance audit since our last update. There has only been one, and this was looking at the risk management culture within Sedgemoor. This audit sort of focused on the ways in which risk management is sort of embedded into everyday activity at Sedgemoor, and that helps to ensure that risk management practices are as complete and operating effectively as possible. We identified 2 priority 2 findings from this review, where there hasn't been any recent training for staff and members, which we also know, it has been partly delayed as a result of COVID. We also identified that not all risk registers within the council were sort of linked to the formal reporting process. There were also 3 priority 3 recommendations, which are detailed in the report, and all recommendations are due to be implemented by the end of March 2022. Moving on to page 5, I'll take members through our follow-up on CCTV. maybe too many C's there, where I can confirm that 3 recommendations out of 8 were complete. However, all others were in progress. As you can note within the report, there have been some changes to the reporting line, and obviously, again, COVID, is having that sort of impact across the whole organisation, where some things have not sort of been delivered within the timeframes expected. A revised target date has been set for the end of September to complete the remaining 5 recommendations. Moving on to page 6, I will draw members' attention to our update on the baseline assessment for maturity of fraud. This was an advisory piece of work that we undertook at a number of our swap partners. We have previously provided the committee with a copy of this report and a benchmarking document showing how the council compares to others. Whilst all the overall assessments are amber, our benchmarking report did show this is comparable with other district councils we reviewed. We are currently working on a more detailed fraud risk assessment, which is looking at individual services within the council and assessing their fraud risk based on the controls that are currently in place. Finally, I would like to draw members' attention to page 7 of the report, which shows our performance for the year, and then to page 10, which summarises all the audits we have completed, the opinion and number of recommendations. Does anyone have any questions?
Any questions, members? Okay, on that, we just have to note the update of the internal audit activity. So thank you for that, Adam. Moving now on to agenda item number 8, the internal audit annual option report.
Thank you, Chairman. So this is our annual opinion report. So we're required to provide an opinion report to the Audit Committee that gives our view on how well governance, risk and control was operated during 2021. So if members could turn to what is our second page, I apologise it doesn't have a page number on it, but it's titled Internal Audit Opinion 2021 at a Glance. So this kind of gives you an overview of our work for the year. So the first thing I'll draw your attention to is the opinion. So we've given reasonable assurance, and as you can see by the dial that is inserted there, there's 4 opinions that we could have given. Reasonable is what we have given, and that means overall, in terms of the aims and objectives of the authority, it is reasonably likely that it will achieve its aims and objectives based on the controls and governance arrangements in place. Key things to pick out on here, you'll probably note there is a significant higher number of advisory reviews this year compared to previous years. That's due to COVID, that we've picked up a lot of work around the business grants and looking at those, which was advisory work rather than pure assurance. I'd also draw your attention to that second line there that says no significant risks were identified in year after testing the controls. So again, as members are aware, when we undertake an audit, we're looking against significant risks. When we assess the control framework, we reassess that risk and how likely it is to materialise. If we think it is quite likely to materialise, we assess that as high and would bring it to your attention. Okay, moving on to pages 3 and 4. So this just details the opinion in a little bit more detail. It highlights the various reviews that we undertook around the additional risk relating to COVID-19. So you can see we undertook some support and advice, as well as reviewing some of the grant schemes, and also undertook the fraud risk impact of COVID reviews. It also highlights the significant reviews that link back to how we awarded our opinion. Okay, if members could turn to page 5, and this is quite an important page for members to keep an overview on. In terms of our work, it has to be closely aligned to what are the significant risks in the organisation. So what we do is, obviously, when we present a plan to you, it links it back to the corporate risk register. This kind of highlights our work for the year and where our work fell against the corporate risk register. I must stress we would not cover every risk in the corporate risk register in any one year. So as you can see there, that it's split out over the medium term. So we'd be expecting to cover these risks over a sort of 3-4 year period. And we also appreciate the risk register as a live document does change over time as well within the organisation. But it's important that members do note where our work did fall this year to know where additional assurances might be required if members so wish to seek it. Moving on to our page 6, so this is where we would highlight any significant risks identified through our work during the year, and as I mentioned earlier, there were none identified, so that is good news. This is where we have also highlighted the limited assurance audits. So these would have been reported to you throughout the year. The risk management one was the one that was just mentioned earlier in our update report. And as you can see there, in terms of the risk rating, those two limited assurance audits came out at a medium risk, not high. Moving on to our page 9, this just gives an overview of some of the added value stuff that we do over and above our annual plan that we provide to you. So we undertake a number of benchmarking exercises. We also regularly provide the members training that some of you attended back in November, and there will no doubt be another training session later in the year. And hopefully you are all on the circulation list as well for the news roundups that we circulate, because again, that gives you relevant information for your role as audit committee members. We are looking at changing some of our audit processes, which are mentioned here. These have been changed in year, so you will be noting some changes throughout the year as well. Moving on to our page 11. So we're required to summarise our performance. I think the key things that the audit committee you need to be aware of is we are and have to be externally assessed, and we were externally assessed back in February 2020, and that's to make sure that we are in conformance with the necessary public sector internal auditing standards, and that assessment came back that we generally conforms, which is the highest level of assessment that you can get in terms of conformance to those standards. And finally, pages 12, 13 and 14 and 15 summarises all the audits that we undertook throughout 2021, and that is the basis of our opinion. All the work that was undertaken there fed into what our view on governance, risk and control was for the year. So that concludes the report. It is here for noting, but happy to take any questions that members may have.
Thank you, Alistair. Are there any questions, members, please? Councillor Bruce.
Thank you, Chair. It was a question on your page 14 about the items that have been deferred or removed with regard to the climate change. Actually, it says dropped. I'm not quite clear now whether dropped means it's not going to be going forward, because there seem to be, forgive me because I'm struggling to read my screen, it's a bit small, conflicting priorities, so not all parties could commit to an audit at this time. Does that mean the audit's not going to happen on this, or is it going to happen in the future? It's just a question of getting everyone to agree a date and a time. Just like a little bit more information as to whether that's going to go ahead or not, please.
Yeah, absolutely. So in terms of reviews that are pushed out, they're taken into account for future audit plans to make sure there's still relevant risks. I can assure you climate change is obviously quite a significant risk area and is one that we're looking at, and that review is in the 21-22 audit plan and is currently in progress. So we are undertaking and doing the work on that, and that is a joint review, I believe, with Somerset West and Taunton because of how closely aligned those plans were. I can also understand that I think from Somerset County Council's point of view, there is also the global climate action plan as well, and there will be a review going on looking across that action plan too. So there's quite a lot of work we should be doing in that area, and we will be able to report back to this committee at a later date.
Thank you.
Any more questions, please? No? Okay, well, thank you for that, Alistair. We've just got to know the annual report and opinion by swap. So we'll now move on to agenda item number 9, annual governance statement, and that's over to Mrs. Turner, please.
I'm going to put my team. Okay, no problem.
Yeah, I'll just speak out. Hopefully you can all hear me on Teams as well. Yeah, so this is the annual governance statement. We need to look at this every year, and it does form part of the statement of accounts. It is a separate document, but it is included within the statement of accounts. There's a requirement under the accounts and audit regulations for the Section 151 officer to review the annual governance statement and also review the effectiveness of our internal controls that we've got in place. So if I move on to the Appendix A, which is the updated annual governance statement for 2021, a lot of the areas here haven't changed. We haven't had a significant change in terms of our internal control system. We've still got all of the same policies, procedures in place. The code of corporate governance hasn't changed. So there isn't a lot of change within this annual governance statement as we go through, because we are quite stable in terms of our internal control processes. We haven't changed, for example, the financial systems or anything like that. So we haven't had major changes. We've got everything in place. Take you on to item 4, we just talk about the council's constitution and decision-making processes. What we do there is we list all of the different meetings that we've got in place and how we make decisions. Clearly, during the COVID pandemic, we had to hold our meetings virtually, but we carried on making decisions as we needed to in a timely manner. And today is our first meeting for a long time in terms of audit and standards, where we're actually physically in the room, or some of us are anyway. We've got there in terms of the strategic leadership team have got on what decisions they all make. We've just added a new section in there about our wholly owned companies, because we have got homes in Sedgemoor, we've got Aspen Housing and Development Limited and Sedgemoor Group Limited, which we didn't have listed in here previously. So we've updated to include those in terms of decision making. Section 5, as I said, we've got Code of Corporate Governance, which has been referred to already within this meeting, but that hasn't changed, and it was approved in March 2016. It's probably due for an update now, but we haven't got any change there. Section 6 talks about our economical, effective and efficient use of resources to achieve the council's priorities. Again, the council's priorities haven't changed, have been updated, so we're still working towards the same priorities that we were working towards when this was produced for last year. We've got the financial and service planning process. As you know, the medium-term financial plan and the housing revenue business plans go through the executive and then on to council. Because of the going forward, because of the decision on single unitary, clearly the medium-term financial plan for Sedgemoor District Council will be a 5-year plan when we produce it this year. Whereas the housing revenue account will continue to be a 30-year plan, but Sedgemoor's housing revenue account and Somerset Western Taunton's housing revenue account will actually join as part of the unitary. We're the only authority still with a housing stock currently. Section 8 talks about the corporate approach to risk management, and as has already been mentioned from the SWOT report, we did have an audit in terms of risk management, and there is a need to do quite a bit more training with members. I think everybody was aware of that. It's been difficult over the last sort of 18 months to focus on things like that, but that's in the plan. Section 9 looks at the review of effectiveness, and clearly all of the documents that some of them have already been presented today at this meeting are taken into account when I look at the effectiveness of our internal controls, and that is the internal auditor's annual opinion, which is just represented to you, which we were given a reasonable level of assurance, which is good. I'm happy with and comfortable that gives us a good assessment or good assurance level in terms of our operations. We have the external auditors reports, and we also have annually we send out to all of the senior managers, so operational management team, and we ask them to fill out an assurance statement and for them to raise any issues that they feel are of weaknesses in internal controls, and that helps us inform our audit plans, internal audit plans for the following year. And also we've got the reports that come through to Auditing Standards. So that just talks about the different processes we've got in place to ensure that we can be confident that we've got an effective internal control system, and we're monitoring that and getting reports through annually. We also, as you're aware, we've got the Pentana performance system, so all of the audit actions go into that, and any high risk audit actions, as we'll see a couple of reports on, do come through. If they're overdue, do come through to Auditing Standards to be scrutinised. So we're very clear on the process in terms of audit actions, and if we get any audits that are partial or no assurance, limited now, I think it's called, no assurance. We do have follow-up audit actions. So all of those processes are in place to give us that reassurance. If you look at section 10, that talks about unsignificant internal control issues. As I said, we were given an overall reasonable assurance in terms of our internal controls that came through from our internal auditors, which is good. There, during last year, there were 27 reviews, and as already been mentioned, there were quite a lot more advisory audits than normal, but that was due to COVID, because there was quite a lot of extra work that we needed audit to help us with in terms of the business grants and other funding that we got in through COVID. So the audit plan is always flexible. We do move things around, but I would say this year or last year we dropped more audits than we normally would. We moved things around a little bit more, but that's the good thing about the flexibility of those audits. And that's not to say that those audits won't be done, as you heard with the climate change one. It's just that we need to smooth things around because of the priority. So there were, as I say, there were more advisory ones due to the audit. So we had 2 audits that were limited assurance. So they will have follow-up audits, and that was the corporate buildings, health and safety, risk management, and the risk management one. So those were the 2. There were 10 recommendations from those audits, and we have got one of the high-level ones that's come up on the overdue actions today. So I won't talk any more about that. And then, not until we get to that item. And then we have the actions. So we have the progress on the actions that were in the 1920 annual governance statement. There are some that are complete, but there are some that are ongoing. And some of the ongoing ones, there were delays, again, due to the impact of COVID on resources. We had to direct resources to other priorities. So some of those items are taking a bit longer than we would have normally anticipated. We've also got the delivering the external recovery action plan and the internal recovery action plan, that, again, connected to COVID. So those are ongoing. And then we've got the issues and projects that have been highlighted for the 2021. The top one being the implementation of a single unitary, which is only 4 works, but that is a huge task, as you can imagine. So I've sort of understated it there somewhat. And there are some other actions that have come through. Quite a lot of them will link back to the single unitary. So the updated medium-term financial plan, again, as I've already mentioned, that will be looking at a single unitary from April 2023 sort of financially, and making sure we've got a balanced budget for the unitary, not just Sedgemoor. And the bottom one there, again, is looking at the resources that are required to deliver the single unitary, but also maintaining business as usual, because we're passionate about the service we provide and the high quality service, and we want to continue to do that, whilst also making sure that we're working on a single unitary that is the best possible for our staff and our residents. I don't think there's anything else I need to highlight with the annual governance statement, but happy to answer any questions. My microphone's flashing, I don't know what that means.
Thank you, Mrs. Turner. Are there any questions, please?
Yes, please, Sharon.
Thank you, Councillor Facey.
Yeah, it's only just a note of what Alison did say, the fact that the aim is to continue the high quality, Chairman, of staff and our residents. That's all, Chairman. I think that's most important. Alison seems to be very keen to carry that forward. Thank you, Chairman.
Are there any more questions? Okay, then we need to now, members are recommended to consider the content of and approve the annual governance statement. Can I have a proposer, please? Yeah. Thank you, Councillor Heathen, and a seconder, please. Councillor Bruce. All those in favour, please show. Carried. Is Liz going to vote as well?
Yes. You're in favour?
Yes. Yeah. Okay, thank you very much. Thank you, Mrs. Sheridan. Now we'll move on to agenda item number 10, review of internal audit.
Okay, thank you, Chair. So again, annually, it's a requirement for the Section 151 officer to review the arrangements that we've got in place for delivery of an internal audit, which is carried out through the South West Audit Partnership, and review how effective this is. The report, I won't go into too much detail with the report, but I guess the section that is really pertinent is the section 4. And I've got a table there where actually look at the sort of performance measures that we've had in place for several years now, and it's quite useful, this table, because you can compare the performance levels. I mean, clearly it was a difficult year. Well, it's a difficult year for everybody, but the auditing was difficult because it was very difficult for officers to have the resources to work with the auditors on some of the audits that were in the plan, and we did have to move audits around, and the audit plan was very flexible, and SWAP were excellent actually in working with us to make sure that we could direct the right resources to where we needed it to help us with the extra assurance that was needed with some of the in particular the big sort of grant monies that we had awarded out to businesses. So I'm pleased to say in terms of the performance that we had, or SWAP had 100% in terms of the levels of satisfaction, and in terms of the audit plan, although we did move things around, and actually it wasn't completed by the end of March, by the 1st of July we're at 96%, and considering the year we had with all of the other calls on resources, I think that was a good performance. And then we just said about the 27 audits that were completed. So I'm satisfied that it was an effective internal audit service, and as I said, the flexibility was really helpful to help us through some of the issues that we had dealing with the impact of COVID, and the huge amount of funding actually the government gave us to hand out to all the businesses, which we had to do very quickly and set up systems very quickly. So we did need audit to advise us on that. And then if just look at section 6, where we talk about service standards that we've got in place in terms of audit, all of those have been met, and as you know, the reports come through to every audit and standards committee, so you're well informed. In the actions completed for 2021, they are ongoing. I mean, due to the year that we had, we didn't deliver some of the things that we were hoping to. So I've carried those forward to the current financial year. In particular, the training. I think there's quite a lot of training we still need to do to ensure that members are aware of their role in terms of audit and standards committee. So that will continue. But yes, the overall judgment is that we've got an effective system of internal control, and we've got an effective internal audit that work well with us and our managers. So I'm happy to answer any questions that members may have on that.
Thank you, Mrs. Turner. Are there any questions, members? Councillor Bruce.
Thank you, Chair. It was just to satisfy my curiosity, actually, the feedback questionnaires. Has there been much change in the number of questionnaires completed and returned over the years? Do we have information in terms of the number that we're talking about rather than just the percentage? I mean, it's great that we've got 100%, and congratulations to everyone, because that's a great result. And also completing the audits 96%, I'm quite impressed. Great service. Sorry?
We only send it to us.
We do have the numbers of questionnaires that have been completed, but I haven't got them to hand, but I can get them for you. We do have the numbers, but I honestly don't know offhand, but we do know. But it is a valid point, because it could be that only one's been completed, couldn't it? 100%. So yeah, thank you. Yeah, no, I can get that for you. I'll circulate that to committee.
Are there any more questions, please? No? So members are recommended to note the findings of this review. So thank you very much, Mrs. Turner, for that. And now we'll move on to agenda item number 11, and that's Simon Tandy, please.
Good afternoon. Can everyone hear me okay?
Yes.
Thank you. Yeah, this is a new experience to me, doing a hybrid meeting, so please bear with me. So this report is on any action that has come from an internal audit recommendation that is both overdue and classed as high priority. and we currently have 4 of those on the system. And what I'm hoping is that we'll have a member of staff responsible for each of those actions, or a representative for those members of staff present, to explain what's happening with those actions at this stage. The first of which is from the Corporate Buildings Health and Safety Compliance Audit, which was conducted in March 2021, and the action is around the creation of a centralised system for scheduling compliance works, and the responsible officer for that is Adam Evans. I don't know if he's present, Mr. Taylor.
Mrs. Taylor, please.
Thank you, Simon. I'm just going to cover for Adam. I've got an update in terms of that audit action. So it's sort of been, the team have split it down into various actions. They are a bit behind, because I think the intention was for it to be completed by the end of June, but the request is that the date is moved on to December 21. Having said that, there's elements of it that have been completed. So the asbestos procedure has been completed, which is obviously really important. The compliance spreadsheet is underway, and there's still more data to put into it, but this has inspection dates, but it's still being worked through, so that is work in progress. The team have entered into a service level agreement with Homes in Sedgemoor to ensure compliance on the fire safety for the mixed use buildings. So where we've got buildings where you've got a shop underneath a flat, Homes in Sedgemoor look after the flat, and Sedgemoor look after the shop. There's a joint agreement now on fire safety for mixed use properties, so that nothing will get missed, which is important. And there's also a request going into for additional resources to help keep the asset management system up to date in terms of the tribal system, which has been a huge issue for many years now, actually. But a lot of the actions are in progress. Some of them have been completed, but the request is that the date is moved from June 21 to December 21 as a more realistic timescale with all of the other issues that the team have been dealing with.
Thank you for that. I propose that we look at each item separately and vote on, the slippage, whether it's going to be A, B, and C. Is everyone in agreement with that, rather than do them all as one? Yeah. So on the first one, is there any questions?
Yeah.
Thank you, Councillor Cleveland.
Which elements have been completed?
So it's the only one in terms of the corporate buildings one. The only one that is listed here is the actual 1.2. But I think there were about 6 actions, and it's 1.2 that's outstanding and 1.1. So the things that I highlighted in that update are 1.1 and 1.2. The other actions are all completed.
I see.
Okay, so which one are we going for? A, B, or C? Any comments?
I think the request is that the due date is extended. So do we have someone to propose that?
Who's talking? 'Cause I can't.
Sandy.
Oh, sorry. Sorry. Yeah, okay, sorry, Simon, carry on.
I would propose that, but I want it to be really firm, because compliance with health and safety within the buildings is incredibly high risk. And I am aware personally of a number of buildings that don't comply with health and safety standards in our stock, and that needs to be effectively reported. The compliance team needs to check it and make sure it's complied with. So it really does need to come back in December, if not sooner.
So you're saying that we go for number A then?
But it seems we've been given an option.
Yeah. All right. Is everybody in agreement with that, number A? Thank you very much. Now we'll move on to the second item, please.
Okay,
Hi.
so the second, Is that Alison Monteith I heard
Yeah,
then?
carry on, Simon.
That's okay. So I was just going to introduce it. This is from the debtors audit, and it's an action to do with the identification of performance indicators that can be used for oversight on debtors information. And Alison Monteith is going to come in and speak about this one.
I was just so keen to do it. I jumped in on top of you, sorry. Yeah, so this one, it has had its date moved several times. Recovery, obviously, during COVID wasn't a huge priority for us. So this is why this had been put back. This is now sort of 90% complete. We've identified the reporting we can use, and we intend to bring an oversight of recovery to the next quarterly monitoring executive, which is in November, not the current one, but the following one. So that should be all complete and ready, like I say, for members of the exec to have a look at in November.
I think therefore the proposal would be to, if members are happy to extend the due date on this one to the 30th of November 2021. But you do have options B and C as well.
Oh, are we happy to go with option A? Councillor, sorry, Councillor Pacey.
Right, shall we go with the officer's recommendation?
Right, lovely, thank you very much. So we'll go with A. Thank you. We'll move on to the third item, please.
Okay, thank you. So the last two are from the same audit, but they are responsible. The actions have different officers responsible for each of them. The first of which is relating to floor area used for apportionment on all of our housing stock and various buildings that are managed by Homes in Sedgemoor. So we have Ben Lane present to speak about this one.
Good afternoon. Hopefully you can all hear me okay. I'm Ben Lane. I'm the Director of Finance and Performance in Homes in Sedgemoor. I picked up, I think, this action actually for the first time last week, and I think the first thing I need to do is apologise to the committee for the lack of progress that's been made in regard to this floor area action. It fell from an audit that looked at service charges generally and how we apply and calculate service charges utilising floor area information. What I understand is that it was the intention that we would utilise amended floor areas provided through what we refer to as the stock condition surveys. This is a comprehensive survey that was conducted during 2021 on, I think, 40% of our stock, with a plan to complete fully that stock condition survey work during 21-22. Regrettably, the output from that stock condition survey work, although it includes multiple bits of information to enable us to plan the work that we do on the stock on the behalf of STC, it didn't produce a floor area information for us. I think in terms of, realistically from where we are today, for the committee's point of view, the option that I think is available to us to explore is the floor area information that appears on the EPC certificates. These are the certificates about energy efficiency, which we hold for each and every property. It also contains a floor area. My proposal to sort of fast track this and not prolong this action any longer than it already has been delayed is that I'm going to work with colleagues on their return from leave to analyse what that EPC floor area data looks like compared to the data that we hold on our system, which was the data subjected to the audit itself. And if we feel that the EPC data actually stacks up and is sensible when compared to that current floor area, it's for us to adopt that EPC floor area as the means for calculating service charges. If in doing that comparison, it's thought that there are some discrepancies, and I'm proposing discrepancies that are plus or minus 10% from the floor areas that we hold, then I think we might then need to embark upon a wider piece of work, which is physically returning for a specific survey to measure floor areas on sample properties. That could take a little time, and I guess I won't know until I've completed the phase one work with my colleagues whether or not that piece of work would be necessary. I kind of indicated, I think, in an update, which I think was too late for the report that pulled together for the papers today, that I would expect that first tranche of work to be completed by the end of September. This analysis of EPC floor areas compared to the data we currently hold, which would then enable me to do an assessment with my SDC and Homes and Sedgemoor colleagues as to whether or not a wider piece of work is required. If a wider piece of work is required, which involves physically going out for specific surveys to measure floor areas, then that could take a little bit longer than that September deadline, as you'd appreciate. My proposal at the moment is for the extension to go through to the end of September, with a view to me reporting back through wherever the channels are on the outcome of that review work that I will sort of fast track from this point.
Okay then, members. So are we going to accept the date of September? Carry on, Councillor Ewan.
I think whatever we agree, I think we ought to be perhaps a little disappointed it's taken this long to find out that a survey being conducted was not going to produce the evidence you required, and that it sounds like you're going to have to start the whole process again. If historic data, which could have been used from 2019 or 2020 when this process was started, wasn't used for whatever reason, and we were waiting for a report that then produced not the correct information. And I think we need to question that.
In respect, sorry, of the question there, I can, as I sort of said at the outset for the introduction, I mean, we've fallen short on this in terms of our performance and our progressing this action forward. And I apologise to the committee. I think having now picked this up myself, you know, first time last week, really being aware of this outstanding action, I will make sure I fast track this through as described, and make sure that this doesn't, you know, appear as an outstanding action on your next audit. It's the commitment I can give you today, but I can only but apologise for the delay, as I've described it earlier on, against this specific action.
So,
Chair, if I may.
yes, Councillor Casey.
I completely take up what Councillor Newman said, but I don't think we need to ask the officer to cut his wrist at this stage. I'd like to go to his recommendation to carry out necessary detail work to the end of September, Chairman. I realise that, Bill. I did say that in the first place.
I wasn't letting you claim that the individual officers, the process itself.
Okay, so are we going to go with recommendation number A and forgive the deadline of September 2021, and then if there's a full survey that has to be done, what we're going to put the date on that?
I think if I'm able to, I think any survey that might be necessary after that work's completed at the end of September, we would do very much sample surveys. I think realistically for those surveys, if we're doing spot checks on I don't know, say 5% to, what would that be, 200 properties, just to sort of validate some of that data, I think it's going to take a couple of months. It will lead us through into December, I would suggest, but I'm hoping that through this first phase of work that we can get a satisfactory solution by the end of September. If further survey work's required, yeah, I can see that running for a couple of months beyond that. And I can work with Simon and SDC colleagues to notify yourselves of the progress made up to the end of September. But I think as a provisional feeling at this point, I think that would be the required potential extension beyond the end of September if that further work is thought necessary.
Okay, thank you very much for that, Chair. Mrs. Turner, you wanted to say
Yeah, I was just going to say actually, and I think Mr. Lane has already sort of alluded to it. If we get to the end of September and there is further work needed, I think then a note just needs, because I'm not sure when the next audit and standards committee is, but a note needs to just go out to members, just informing them that, you know, that what stage you're at, and if there does need to be extra work when the new deadline's likely to be, and then by the time that's completed, there will have been another audit at standards committee. I think it's important that it's just, you just kept up to date on what's happening with this action. And if can I also just going on to the next action, because this is very well, this is connected, in terms of the service charging policy, because the service charging policy can't be put in place, a new one, until we've sorted out the calculations and the floor areas. So they're sort of chicken and egg really. So I think the new date for the service charging policy will need to be April 2022, because you wouldn't be unlikely to put in a new service charging policy during the financial year. So hopefully the floor areas will be, the portion will be able to be sorted in time for the consultation to be done and the new service charging policy to be in place for April 2022. Thank you.
Thank you. So are we going with Councillor Bruce?
Thank you, Chair. I just wanted to ask a clarification that this, the service charge policy is going to be 2022. What kind of effect is that having on some of our residents? What are the consequences of that date being so far ahead?
In terms of our residents, I don't know what the specific implication will be, because it will depend on the changes in the floor apportionment, the floor areas, etc. But the delay, it will just mean that the service charges are the same this year, and the new service charges will be in place when the new rent is set, which will start 1st of April next year.
So my question was a bit like, are the current service charges causing an issue? Is it something that needs to be resolved quickly, or is it not a particular issue at the moment? We're just reviewing the policy.
Yeah, it's not a particular issue. It's just that we're not sure, and when the audit was done, we're not sure that my microphone is flashing again. That must be me. We're not sure that the actual apportionment and the floor areas are actually correct. And if they're different, then that changes the service charge that people get. But it's not an immediate issue. It's just when it was audited that was raised as that there could be some errors. But you wouldn't implement a new service charging policy and new service charges during the year. So if you miss the 1st of April, then it is the next year to implement it. So that'll be 1st of April 2022. But there could be changes in what people are charged.
Okay, thank you.
Are we in agreement then to go with the officer's recommendation of April 2022?
Yep.
Councillor Stacey. Oh, you're agreeing with me?
Yes,
Right, okay, right, okay, thank you for that. So thank you, Simon and Ben, for your reports. And we'll now move on to agenda item number 12, Treasury Management. And I believe that's Mrs. Monteith again?
Yep. So in order to ensure we retain access to our PWLB borrowing, we need to confirm our approach to the element of borrowing that isn't eligible for PWLB. The PWE changed their guidance in November 2020 on borrowing, and they won't advance money for commercial purposes any longer. The last purchase that we made, the decision was made just before the PWLB change, but the completion didn't happen till after the PWLB change. So we have about £10 million worth of commercial borrowing that isn't eligible for PWLB loans. That's not a problem for us at all, because only about 50% of our borrowing is with the PWLB at the moment anyway, and there are other ways we can borrow. So we borrow internally from our own funds, where the HRA has funds and the general fund has funds at the moment. We can also borrow from other local authorities, or we could borrow from banks. So it's not a huge issue, but we do need to be able to access PWLB borrowing overall. And when I tried to borrow some funds a little while ago, the PWLB wanted me to prove that I wasn't borrowing for this ineligible borrowing. So in order to prove that, I need to bring this report to committee today and to just show you the calculation that I've done, or the statement that I've produced for the PWLB, and which I will keep up to date going forward. So that's in paragraph 4 of this report. So what I've done, I've taken the capital financing requirement, which at the end of last year was £128 million, and I've split that over the areas that capital notional borrowing is for. So the first column is the general fund. The second column is for commercial purchases. The third column is the non-eligible PWLB, non-PWLB eligible commercial purchases, capital loans, and then HRA. So basically, that shows quite clearly that almost £10 million of our capital financing requirement, so that's the element of capital that we've notionally funded by borrowing, is not eligible for PWLB. Underneath that, I've then just split it out by how it was actually borrowed at the year end. So you can see of that 128 million, 61 million was from PWLB loans, 40 million from other loans, and 27 million from internal borrowing. So that kind of proves that we're not reliant on PWLB borrowing, but we do want the access to it to lock into the relatively low interest rates at the moment. So what I'm going to do is just keep the CFR split between the borrowing and quite clearly keep that non-PWLB eligible commercial borrowing in a column on its own. That will reduce every year by MRP repayments, which are minimum revenue provision payments towards the loan. So it will reduce every year. But I just need to bring this to you today to prove that we're going to keep this record. We'll have it as a prudential indicator so that when I go to borrow in future, I can prove that I'm not borrowing for that ineligible part. So, for example, I could borrow at the moment for the £27 million of other commercial borrowing that at the moment is other loans. So hopefully that makes sense. It's just a nod through for this really to show you what I'm going to do. PWLB are already happy with the approach that I've taken, and they've seen this, and they're happy that it just, if members see it today and it's kind of confirmed that I'm just got to keep this up to date, they're happy that they will lend to us for the other areas, and they have in fact released some funds quite recently to me. Any questions, then I'm happy to answer them.
Members, I'm just going to take over as chair for the time being, as Julie's had to go away to make a phone call. Any questions or comments from members or people online? Everybody happy? Then we can note that report. Thank you very much. On to item 13. And we will be hearing from Jerry O'Loughlin, I understand, about the annual review of the financial regulations. Jerry, are we here?
Good afternoon. Okay, you've got my report in front of you, I hope. So the financial regulations have been reviewed to either bring them back in line with contract standing orders or to follow new things that have happened because of more home working now, and also there's a slight amendment to do with travel policy. Any questions, please?
Members, are there any questions or comments? We are required to approve this, so this is your chance to interrogate Jerry. Everybody happy? Can I have a proposer to approve? Thank you. And a seconder? Those in favour? Anyone abstaining? Anyone against?
That will be a recommendation to full council, Chairman.
Say again?
That will be a recommendation to approve by full council.
Oh, okay. Agenda item number 14. I'll give you a time to scroll down my page, sorry. To apologise, members. We're looking at the gender pay reports. Are we trying to get to the front of it?
I'm just trying to get the reporting officer, Helen Thomas, into the meeting, Chairman.
Thank you. Okay. Gemma Leader. We've got Gemma Leader online.
Chairman, we've got Helen Thomas as I think Gemma Lee is off today.
Go away.
Go ahead then, Helen.
Good afternoon. So I am here to bring the report on the gender pay policy. That is the report that is due to be published. So this is a report that gets published annually every year. It tells the gender pay gap that we have as at a year ago. So March 2020, these figures are, as opposed to March this year. As you'll see from the report, the gap has increased slightly from the year before. That is to be expected in terms of things moving around a little bit. The gap isn't very big. The reason really for the difference is there are two reasons. Firstly, the fact that the very senior team has had a slight shift whereby one of the female assistant directors left and was replaced internally by a male assistant director as part of our internal promotion of staff. So that had a slight shift in the very senior team, and part way down the organisation, there has been a slight shift in terms of the fact that we've increased the number of staff by approximately 30. And of those, they are mostly in the lower middle quartile and the upper middle quartile, and they are mostly female staff. The problem with that is, in terms of the gender pay gap, is that they start at the bottom of each of those pay scales. So the longer serving members of those teams are at the top of the pay scale, and so bringing in more female staff lower down has a slight gap from that perspective. And because there are more staff in that middle quartile, those two middle quartiles, it brings the medium, it shifts where the medium pay is, so that again shifts it slightly in the wrong direction in terms of our gender pay. This shouldn't be confused with equal pay. Equal pay being where we're paying the same for male and female staff of the same in the same role or a role of equal value, but that is a separate process. This is just the overall gap in the what we pay male versus female staff as a whole across the organisation. But happy to take any questions on that.
Members, we are being asked to approve the report to council for approval. So any questions or comments? Then I'd ask for a proposer on the recommendation to approve the gender pay statement and publish the details in accordance with the regulations. Do I have someone to propose that?
I'll propose it.
Julie Pay and seconder. Take your pick. Those in favour? Anyone against? Okay, thank you. Item 15. Welcome back, Julie. Well, start of agenda item 15. We go to, yes, we go to Mr. Mel Hewish.
Thank you very much, Chairman. Members, good afternoon. So first of two reports from me this afternoon is setting out a statement of councillors' allowances that were paid for the 2020-2021 statement of fact based on the allowances that have been paid, special responsibility allowances and so on. So that's the statement that's there. It's a requirement of the Constitution to be reported into Audits and Standards every year. So there it is. So if there are any questions, I'm happy to take them.
Any questions, members? Then that's noted. Thank you. And I think you're staying on for the next item.
And yes,
and our final item.
last one of the day, and again,
another requirement from the Constitution to report councillors' attendances for the municipal year. So the figures are there before you. What I omitted from the report is to say that the figures that are shown in the table in the brackets are the levels of attendances that happened for the previous year. So just by way of comparison, that's what they're there for. So sorry to have confused you members by putting those in there and not setting out what they were for. And obviously that just shows the number of meetings, of committee meetings and council meetings members attend. Obviously there are a number there that are showing quite a high number of attendances, and that is partly due to COVID and holding a number of virtual meetings when we were playing a little bit of catching up. So we were holding sort of development committees every 2 weeks and executives on a similar basis just to catch up with some of the backlog. So some of those figures will be 4 or 5, maybe, or a little bit more higher than they were the previous year. So again, something for you to note as a statement of fact from the last year, but again, happy to take any questions.
Any questions, members? Comments, Mrs. Perry?
No.
Only satirical, Chairman. Looks like the councillor Phil must have an apartment here.
Then we will note that report. Thank you very much. And that is the end of today's fun and games. So I declare the meeting closed.